Welcome to our deep dive into the Iraqi dinar's potential revaluation. With Iraq set to enforce a ban on cash withdrawals in US dollars, rumors swirl about a possible drastic increase in the dinar value. Could it really reach 4.2 against the dollar? Let's explore the facts and possibilities. The ban on cash dollars. Starting January 1st, 2024, Iraq will implement a significant policy change, prohibiting cash withdrawals and transactions in US dollars. This decision by the Iraqi central bank aims to address and mitigate financial crimes and prevent evasion of US sanctions, particularly with respect to dealings with Iran. The policy intends to eliminate the misuse of a substantial portion of the $10 billion in cash that Iraq annually imports from the New York Federal Reserve. As a result of these changes, only dinars will be dispensed at banks for cash withdrawals starting in 2024, regardless of the currency in which deposits are made. This move is part of a broader strategy to reduce the economy's reliance on the US dollar, which has been the preferred currency due to continuous economic instability and recurring conflicts in the region. This policy shift is expected to have profound implications on both the financial system and the everyday financial transactions of the Iraqi populace. Reasons behind the new policy. The new currency regulation is designed to halt the illicit use of the significant funds Iraq imports in US dollars, which totals around $10 billion annually from the New York Federal Reserve. This policy is aimed particularly at curbing the diversion of these funds for unauthorized activities, including the evasion of US sanctions on neighboring countries like Iran. The Central Bank of Iraq, CBI, is focusing on enhancing the transparency and accountability of currency transactions to strengthen the financial system and ensure compliance with international financial regulations. Impact on the local economy. The initiative to phase out the US dollar in favor of the Iraqi dinar is expected to dramatically affect the local economy, which has shown a preference for the dollar over the dinar due to prolonged periods of war and economic crises. This transition could lead to initial disruptions in everyday financial activities as citizens and businesses adjust to the new norm of using local currency. Over time, this policy may help stabilize the Iraqi dinar by reducing the demand for dollars within the country, potentially leading to an improved perception and increased usage of the local currency. Current exchange rates. The Iraqi dinar currently operates under a dual exchange rate system, the official rate and the parallel market rate. The official rate is set at 1,320 dinars to the US dollar, controlled and maintained by the Iraqi central bank for all formal economic transactions. In contrast, the parallel market rate, which is often influenced by market dynamics and less formal transactions, stands at approximately 1,560 dinars to the dollar, reflecting a roughly 15% devaluation compared to the official rate. This discrepancy between the two rates highlights the challenges faced by the Iraqi economy in maintaining currency stability and underscores the broader impacts of economic policies and market confidence on the dinar's value. Banking adjustments and dollar shortages. In response to the new regulations and to manage the limited availability of US dollars, Iraqi banks have begun to enforce stricter controls on dollar cash withdrawals. This has led to a notable shortage of dollars, affecting consumers and businesses that rely on dollar transactions for imports and everyday dealings. Banks are now rationing dollar disbursements, often prioritizing certain transactions over others based on criteria set by the Central Bank of Iraq. Additionally, due to these dollar shortages, many banks are facing liquidity issues as the demand for dollars exceeds the available supply. This scarcity is exacerbated by simultaneous large withdrawals, as depositors rush to secure dollars amidst growing uncertainties about the financial stability and future value of the Iraqi dinar. The central bank's strategy. The Central Bank of Iraq, CBI, is strategically navigating these monetary changes by tightening control over dollar transactions and pushing towards a more digitized and formalized financial system. This move is seen as crucial to combating financial crimes and ensuring the proper use of foreign currency reserves. By limiting physical cash transactions and promoting electronic payments, the CBI aims to increase transparency and reduce the opportunities for money laundering and other illicit activities. The central bank has also been working closely with the U.S. Federal Reserve to manage Iraq's substantial foreign reserves more effectively. In these efforts, the CBI has not only set up a robust regulatory framework for wire transfers, but also denied any stoppage in cash shipments from the Fed, ensuring that regular dollar inflows continue. This approach is intended to stabilize the Iraqi dinar by curtailing the parallel market's impact and reinforcing the use of the dinar in everyday transactions and trade within the country. Market and public reaction. The response from the Iraqi market and the general public to the new financial measures has been mixed, with signs of both concern and adaptation. The scarcity of dollars has led to increased frustrations among citizens and business owners who find themselves caught in a tightening financial environment. Notable reactions include heightened activity in the parallel market as individuals seek alternatives to acquire dollars at higher rates. Such activities are indicative of the deep-seated apprehension regarding the dinar's stability and the overall health of the Iraqi economy. Additionally, public sentiment has been palpably tense, as demonstrated by several incidents at local banks where customers have expressed severe dissatisfaction with the banking services. The feasibility of revaluation to $4.2. The prospect of the Iraqi dinar revaluing to 4.2 against the US dollar has sparked considerable speculation and debate. Economic analysts emphasize that such a significant revaluation would require profound and sustained improvements in Iraq's economic fundamentals, including increased political stability, enhanced foreign investment, and substantial growth in the non-oil sectors. Currently, Iraq's economy heavily relies on oil revenues, which are subject to global price fluctuations and do not necessarily support a strong valuation of the national currency. Furthermore, the Central Bank of Iraq's recent measures to curb dollar transactions and promote the use of the dinar are primarily aimed at stabilizing and formalizing the financial system rather than drastically increasing the dinar's value overnight. While these measures may help reduce illicit financial flows and stabilize the currency, they alone are unlikely to propel the dinar to such a high exchange rate in the near term. Market experts and financial institutions generally maintain that a revaluation to $4.2 is highly improbable under current economic conditions. They caution investors and the public against unrealistic expectations that could lead to speculative behaviors detrimental to the economy. Thank you for joining us in exploring the intriguing scenario of the Iraqi dinar's potential revaluation to $4.2. As we've seen, numerous factors influence currency values, and while hopes for a strong dinar persist, realism and careful analysis are crucial. Stay tuned for more updates and insightful discussions.